dark side
of silver. All right, this is pretty cool. And all those people out there who missed it, you'll just have to tell them about it later, because I'm not wearing this the whole time. Very steamy. Okay, ladies and gentlemen, those of you who made it down here on time almost, I have two very simple points for you. How many people were here last year? Raise your hand. So you don't need a whole big repeat of the Darth Silver thesis. There are a couple people who weren't there. Is there anybody that doesn't know why I'm called Darth Silver? Raise your hand. No. Okay, good. Okay, everybody gets it. All right. So I really don't need to beat that to death. I will cover some quick basics, but I have two very simple points for you. One is that things do change. The world changes. We have smartphones, satellite communication, instant translation around the world. We've got facial recognition and Black Mirror social schemes going on in China and spreading around the world. Things do change, and that means that the use case for metals can change too. I'll talk about that in a second. But the outlook is still bullish. So despite my Darth Silver mantra, I'm here with good news. So quick recap. Silver's role is visibly changing in the world. Now, whether you want to hear this or not, I think it is a danger to all of us as investors, as speculators, to be religious about what we want to hear. Mr. Market doesn't care what we want or what we think should be. Mr. Market, we're only the tiniest fingernail of one finger of the overall market, the people that know and get what monetary metals are. So what we think, what we know, does not rule the world, and you can't forget that. Governments don't see silver as money anymore. They don't keep it in their central banks anymore. The Basel III Accord doesn't cover it. It does cover gold. They say gold isn't money anymore either, but if you look at what they do, not what they say, it is clear that central banks around the world, they know the JP Morgan quote. So yes, I'm not anti-silver. I'm not hostile to silver. Yes, I understand that silver is the word for money in many languages. I wear silver. I love silver. I actually prefer the color of silver to the yellow color of gold. But we don't want to be, what was, the horsewhip buggy makers of the world thought their business would never change, never go out of, horses were the main mode of transportation for thousands of years, and yet they no longer are. So silver's role can change, and if you don't want to hear that, you should get up and leave now, because that's part of the whole thesis. That's why I'm here. But I'm not a bear. And the big one is that even if there is a new gold standard, that doesn't necessarily mean that it needs to be a bimetallic standard with silver included, especially with digital warehouse receipts being so transferable. It's easy to make change for gold now. And you don't have to physically carry it, and you can transact in micrograms of gold. So the role of silver, let alone copper, is pennies, does not need to come back even if there is a new gold standard. So those people who are like, okay, yeah, it's an industrial metal now, but in the future, when the world goes Mad Max, I'm going to be glad for my silver stack. Well, actually, if the world goes Mad Max, I think you're right. And I have my own stack of physical silver, and it is bigger than my stack of physical gold for that reason. But I'm not going to carry suitcases of it around. That's not practical. Silver is for making change. And I sure hope we don't end up in Mad Max world. And for all the threats of that we've had for a long time, we really never have. And I'm not planning for a Mad Max world. That would be, at that point, I'll be worried about a lot of other things besides whether or not the gold-silver ratio is where we think it should be. So this is the Darth Silver thesis in short. Agree with it, disagree with it. The main thing is, what is the data telling us? Like, you can hate me, you can throw an egg, I've got a mask, go ahead. But what is the data telling us? And, the right-hand side of that chart, that's a great big alligator with very sharp fangs. And you stick your hand in that alligator jaw, you gotta know what you're doing. You're taking a chance. And here's the thing, the gold-silver ratio is a real thing. I don't dismiss it because it doesn't exist or because it doesn't revert to the mean over time. I dismiss it because it doesn't tell us which line is going up and which one's going down. The gold-silver ratio being out of whack can be made less out of whack by gold falling as easily as by silver rising. There had been in the past some patterns that tended to say, oh, this condition means that silver will rise. But ever since 2012, that's 10 years when we fell off that last big cliff, none of that's worked. And the other thing to keep in mind, we all know as diehard silver bugs that in every bull market for gold, ever since Tricky Dick severed the connection between gold and the dollar, 50 years of unbroken track record, silver has lagged gold and then more than caught up with gold in the end, right? Except it didn't in 2020. And in 2020, when that didn't happen, a lot of people are saying, oh, well, it's not done yet. Silver will win in the end. It'll catch up in the final reel, the 11th hour, right? Well, that may still be true in a broad, we look back on this 10 years from now, but we're now more than halfway through 2022. And to say that whatever happens next to silver or gold and silver is an extension of what happened in 2020, I don't think that holds water. I think 2020 counts as a real breakdown. First time things change in the entire history, modern history of gold and silver being separated from this arbitrary extraction called the United States dollar. Silver did not catch up with gold on a percent gain basis. Therefore, you can't go around saying anymore silver always catches up with gold. Now, one time out of all the whatever 8 or 9 cases it is out of the last 50 years, still pretty good odds. I'm not anti-silver. I do think silver will catch up with gold on a percentage gain basis. And that's one reason why I'm so keen to buy silver stocks. But I'm just saying, here's the data, right? Don't throw your eggs at me. Look at the data. Those alligator jaws have not closed, even with the volatility we saw in 2020. And we now have an exception to that 50-year gold and silver rule. Don't ignore that. That is a real thing. That is a fact. Okay, that's the bad news. But, JP Morgan quote, gold is money, everything else is credit. Silver is still money, and it really is. So there have been days over the last year that you'll see gold up and silver down, and it's very disconcerting. But really not most of them. Most days you see gold and silver up and down at the same time. And one goes up more than the other, and on some days silver gets the industrial metals tailwind and it just smokes gold's posterior and goes way up higher than gold. And other days it's more like the monetary driver and gold goes up and silver kind of, I'm not so sure, okay. But it still goes up with gold. They still move together. So even if my worst Darth Silver prophecies come true, and there's a new gold standard sometime in the future that doesn't include silver, those bastards, right? For now, gold and silver are still moving together. Silver is still a monetary metal, and whatever the central banks say, and even, by the way, never mind us silver bugs here, like Mrs. Singh in India, or Mrs. Chang in China, or Mrs. whomever in whatever, people all around the world still see silver as money, and especially if they can't afford gold, they will buy silver in times of safe haven demand. Like the safe haven demand for silver is still visibly, demonstrably on the table. That has not gone away yet. My Darth Silver thesis is forward-looking to the future. Right now, silver is still money, gold and silver money, not palladium, not platinum, sorry, not copper either. And that is something I am personally betting on. This is why I'm still very keen on looking for the best silver stocks that I can find to put my own money into. But honestly, my stack of silver, it's probably not getting any bigger. I've got enough to make change. If I want to sock like hard money away for some scary future, it's going to be gold. It doesn't tarnish, it's smaller, it's more convenient. I can carry $1 million of it in a briefcase right now, and it would hurt my back if I had to do that with silver. Okay, is that clear? This isn't like an unstoppable train. If anybody ever has any questions, raise your hand. I do want to have time for Q&A at the end. Okay, so gold and silver is money, but silver does have its industrial side. So this is something I really want to stress. The assumption, the mainstream assumption, what you'll hear in the mainstream financial press, the talking heads chattering every day, They're starting to wake up to the reality that all of us probably have seen coming for some time of the recession that we are in, and will get more painful. And as that reality spreads and percolates, you're going to see commodities take it on the chin. And that we're seeing it right now. And that is an extra weight on silver. It also hurts gold somewhat, but silver much more because of its industrial side. But these guys, even if we're in stagflation now, they still can't see it. We have peak inflation, woohoo, it's come down to 8.6. That's still ruinously high, and we have an economy going into recession. That's stagflation. It's not even just weak growth stagflation, that's recessionary stagflation, which according to the talking heads on financial media, doesn't exist. Can't happen. Inflation is caused by confidence. Inflation is caused by an overheated economy. So QED, that inflation doesn't exist. I'm not listening. Right? So they're wrong. You're right, they're wrong. Maybe I'm wrong too, maybe we're all wrong, I don't know. But I think you're right, I think they're wrong, I think they're going to figure it out soon. And that will be very good for safe haven demands in particular, monetary metals, and that does, Darth and all, include silver. Stagflation happens. There's a key takeaway. And also, don't forget the debt. Right? Can the United States government, whatever they say, whatever Powell says, whatever Lagarde says, all these people, can they really afford to let interest rates normalize? There are a lot of smarter people than me out there that say they can't. And they're talking about maybe 3.5%, 4% terminal rate, which is, of course, way lower than inflation still is, right? We'll see. But there are people who have done the math on that, and they say the United States government cannot afford a 4% interest rate. Like, never mind future obligations and unfunded liabilities. Like, the current budget of the United States government does not work at normalized interest rates, especially with all the short-term paper they need to roll over. I mean, if the Fed funds rate, it goes anywhere near there, where the bulk of the United States government's debt is on the short end of the curve right now. That is seriously scary. So there's I'm not privy to the inside counsels of the government. I can't say I have my secret sources in the CIA or the administration, and they tell me, here, you can take this to the bank. I don't know. But I'm looking at it from the outside. I think there's a serious constraint as to how much they can fight inflation, and they know it. On the dark side, here comes my Darth mantle again, don't forget that silver is a byproduct. Okay? I love silver. I hope I've established my silver part of my Darth credentials here. I love silver. I'm looking to invest more heavily in silver. But the fact is that it's a byproduct. You must not ever forget that silver is a byproduct. Why is that so important? Because on the bright side, it means it's inelastic to supply and demand are inelastic if there's a high demand that doesn't necessarily increase supply of silver, because most of it comes from copper mines, and then after that, lead and zinc mines. So if you have an economy that's going into recession and you have less copper demand, you're going to have less silver production, even if safe haven demand sends gold and silver north. And that combination of conditions, by the way, is what happened when silver went back up almost to $50 in 2010, and it's what happened when the Hunt brothers tried to corner the market back in 1980. That combination, this perception, this need for safety, which includes silver and gold, and there's a supply constraint, that's what makes silver go in these mini manias. I'm not promising that's going to happen anytime soon, but the conditions are that could happen. If we get fear and we get recession and supply, like copper miners start putting things on care and maintenance, you could see silver go absolutely nuts. And that's one reason why I want to own the best silver stocks before that happens. But the downside is, this whole electrification story, the green agenda, where everybody's going to drive electric cars by next year somehow, and all the electricity is going to be there somehow, all this stuff, pixie dust, it's going to make everything work fine by 2035. Whether we think that's crazy or not, whether we think it should happen or not, I'm a hardcore anarchist end of the libertarian spectrum, free market kind of guy. I want the government out of all of this stuff. Government doesn't ask me what I want. Right? So it's happening, whether we think it should or not, it's happening. This is the agenda. It is an agenda supported by the vast majority of people around the world. Young people think this is a great thing, and they're voting. So it's not going away. And there's a thesis out there that the industrial demand for silver is going to outstrip supply. Some of my good friends here at this conference have made this argument. It may. I think perhaps in the near term, it probably will. By near term, I don't mean tomorrow. I mean in the immediate years ahead, because it takes so much time to spool up these giant copper mines, or even get them permitted, let alone financed and built. So I think like maybe over the next 5 years, we could see the industrial side of silver demand, after the immediate recession, we'll see how that works out. But this green agenda is going to push that demand. I agree with that thesis. I'm sure you've already heard. My question, what I want you to remember, key takeaway here, is that that same demand for silver as an industrial metal is demand for copper as an industrial metal, which is the #1 source of silver in the world. And it's the worst source of silver in the world if you think of it this way, because most of these giant copper porphyries, they have, maybe a smidgen of gold and molybdenum in them, but the silver in them is such a tiny amount that many times they don't even measure it. Like, we don't know some of these, gigantic gigamines out there that are on the plan. You can't go and look at their feasibility studies and say, oh, there's no silver in there, we're safe. No, they didn't even bother reporting it, because it doesn't matter when you have 10 billion tons with, a gram per ton of silver, it doesn't matter. But if you got 10 billion tons with a gram per ton of silver, that's a lot of silver. And it will report to the concentrate or to the doré bars, and it will make it to market. So farther ahead, the very thing that drives silver's other side, besides JP Morgan's definition, this huge growing industrial demand, I agree with that thesis, but it also brings on more supply. And it brings on supply that doesn't care what the price of silver is. Does anybody not understand what I just said? Like, this is really important. And you can throw eggs at me, but it won't change the fact. Right? These giant copper mines barf silver they don't care about. And it is not just an incidental or an extra. This is the largest source of silver in the world. It's where most of the silver comes from. And we love it when those mines shut down, and that's bullish for supply of silver. Don't forget, elevators go up and down. Right? So this really is the key point #2 that I want people to take away. It's why I say don't be religious about this. I'm not hostile to silver. I hope I've established that. But I want to have my eyes open. I don't want to be a silver bull that just charges at that red flag and doesn't see the bloody sword behind it. And as a newsletter writer, I'm trying to tell you, I'm trying to warn you, I'm trying to share this perspective. Don't forget the sword behind the red flag. Don't be a blind bull, please. I like my friends. I want them alive and healthy and well. Or even if I didn't, I would want your money, so I need you to be rich and successful so you can pay me, right? I'm totally selfish up here. Go out and make lots of money so I can take it from you. Do you understand what I'm saying? Like, this is real. Please, please don't dismiss this. That source of supply it's coming. And it won't care about the price of silver. So, key takeaway, on your speculations, on your stocks, as my friend Doug Casey likes to say, these are not family heirlooms. Right? Don't forget to take profits. Don't forget to cash in when you have a big win. Has nothing to do with your stack of silver for Mad Max days. Okay? So, things changed. Buggy whips, satellite communication, instant translation around the world versus Roman silver coins. Okay? Things change. Hate me if you want. Things change. And silver supply is not, I think, sacrosanct. There is going to be, when the agenda overcomes the NIMBY fear of mining and these big copper mines get permitted, there is going to be a lot of silver supply further in the future. But for our investable timeframes, personally, I invest for the next year or two. If I have to wait 3 or 4, I get very itchy. This makes me very bullish. And so I know this sounds like an attaboy or cheer up thing, but my view is, and where I'm acting with my own money is, that the slump like we have right now is an opportunity. I know we're tired of opportunities. We want payday. But again, Mr. Market doesn't care what we want. And I do see the current context as an opportunity. I have a shopping list. I have been averaging down on some of my best gold and silver plays, includes silver. And I hope that you guys won't feel too beat up and will have that positive outlook. Okay, so I haven't been given the hook yet. I don't see a little green or red light that tells me how much time I have. But I'm here, and I would love to answer questions. This is my favorite thing about being at conferences. Yes, sir. What am I averaging down on? I have a long-standing, not tradition, but a policy that I don't give away free stock tips. And every once in a while, an MC at one of these shows will wrench something out of me, but I try really hard not to do that. And it's not just that I'm stingy, and it's not just that I want you to subscribe to see, but that is part of it. Like, people pay me for that information. And it's not fair for me to blab everything away, especially my shopping list. What we're doing right now, there may be people that haven't implemented the latest guidance. But, okay. But the other thing is, sorry to some of my esteemed peers here, you should also be very suspicious of people who answer that question too freely. Like what's in it for them? Why is somebody giving me a free stock tip? Sorry, but you really should ask yourself that question. So let me answer it this way, the company types. Because right now with the cost blowouts, the producers are in a world of hurt. You know who I'm talking about. We got some of the biggest silver players out there reporting either losses, soaring costs, diminishing margins. That needs to be sorted out before I would buy any of those. You know who I'm talking about, right? And then there's the developers, the people that are building their mine. The pre-production sweet spot has been one of my favorite investment theses for many, many years, because the difference from a company that is literally pouring money into holes in the ground, it's drilling for exploration, to a company that is pulling money, and in gold and silver's case, it is literal money out of the ground from the mine. The difference in value there is night and day, and it's fairly predictable. You can see who's building a mine. You can see who's got a mine that's worth building. And so I love that. But we're seeing huge capital blowouts. Our friends up in Canada, the Coke project, I don't know how to pronounce that, 90% capital overrun. And if, things like that are really concerning. So for the pre-production sweet spot, and by the way, I have a free report at Independent Speculator. It's called the Pre-Production Sweet Spot. Just type that in the search tool, free download. I still like the thesis, but right now, I wouldn't buy a pre-production sweet spot play unless they had fixed price contracts, where the contractor has to deliver the mine at this price by contract. And even then, it's still kind of nervous, because if the contractor comes back to you and says, well, you either need to pay me 20% more or I'm bankrupt and you get no mine, you're going to pay 20% more. So even there, this kind of thing. So where does this leave us? Actually, believe it or not, it leaves us with exploration. And you may not understand how significant this is for me saying this, because I hate exploration. Exploration sucks. It fails. The default expectation is not just half of them will fail or 90% of them will fail. It's like 299 out of 300 of them are going to fail. So I personally do not invest in pre-discovery exploration at all. I wait until I see what I call success in progress, another free download. Success in progress, you can see that, I missed the first discovery hole. Yes, I missed it. But you know what? The risk from that discovery to delivering a multi-million ounce resource, or in a silver case, 100 million ounce resource to the market, the value added from that discovery hole to becoming an advanced exploration play is huge. On the Lassonde curve, that initial spike on the discovery hole, that's not one hole. That's dozens of holes from the first eureka moment to, aha, we really have something. And then you go down into that boring engineering phase. So I love the success in progress part of the and that's where I'm looking for silver stories that are like that. And then if you do want to swing for the bleachers, the 10-baggers and all that, on pre-discovery exploration, then look for prospect generators. And if you're a silver bug, look for prospect generators that have a substantial silver potential in them. So I hope that helps. That's where I'm focusing. Charles, can I answer your question for you? No? Okay. All righty. Anybody else? I haven't been given the hook yet. I actually don't know what time it is. But I got 10 minutes, I think. Many times people will write in, what do you think about this company, or what do you think about that? And if it's company specific, has anything to do with stocks, I can't answer the question. That can be deemed individual investment advice. But here I am at the podium. I am publishing my view to anybody. Yes, sir. Outlook for new copper mines coming online in the next few years. I'm actually pretty bearish. Okay, two key points. One is the ESG stuff, and I wrote an article, it's a free article, called ESG, the most valuable BS in the world. And, I actually don't like pollution. I'm keen on being nice to the natives and helpful and all that. I'm not trying to be a rapacious, evil capitalist to tie women to the railroad tracks on the weekend or anything. But being a good corporate citizen isn't anything new. However, this new ESG way of looking at it, whether we agree with it or not, whether we think it's a load of politically correct dingo's kidneys or not, it is a new permitting requirement. So copper projects that don't really have solid ESG credentials, I think, it's really tough. And there are not a lot that are ready to just come online. I mean, after Ivanhoe in the DRC, there's nothing like that right around the corner. They all need permitting, and then they need to build the mine and so on. So I actually do think, this is part of my silver bull thesis, right? I think it's gonna take some time for copper to spool up to meet the coming demand. The other thing is, here's a valuable takeaway that I hope you can remember and keep in mind, is that generally speaking, a crappy deposit, that's a very technical definition, but I think you understand me. Generally speaking, a crappy deposit is still a crappy deposit at higher metals prices. Like there's this idea for the land banks that a higher metal price is gonna make everything, kiss all the boo-boos and make everything okay. Well, initially, like the first year or two as metals prices soar, that everything looks better, that's true. But look at what's happening now, what we just talked about, these cost blowouts, the CapEx blowouts. If you're running gensets high in the Andes, your diesel cost just doubled over the last year, right? So the same commodity super cycle that drives your metals prices up and makes the project look better, pretty soon drives your input costs up as well. So if your top line and your bottom line rise, what was a crappy project down here is still a crappy project up here. So there's a lot of talk about these gigantic copper projects that are, now copper's going to $6 and all these forgotten, unloved copper projects, they're all going to come onto the market. We're going to make so much. Well, don't forget that, please. A crappy project is a crappy project. And maybe if prices move fast enough ahead of costs, and you can get your project built, financed in that window, maybe. Sometimes things happen. Or if a project is small, if you've got a small high-grade copper mine and you can build it in a year or so, maybe you can take advantage of the different rates at which things move. But generally speaking, these giant copper mines that take a decade or more to permit, we've got one in Arizona that's 30 years now and they're still dickering over it, right? And they take that long to build. By the time they're done building it, the study that made it look great at copper having shot up to $5 or whatever, a 30-year mine life is not going to be $5 or $6 copper equivalent. Really, whatever the price is, copper could be $20 10 years from now. But if oil is $200 and you're running gensets, you understand me? Okay, so I think that's a valuable takeaway. I hope you can remember. Crap is crap. Simple. Yes, Charles. My thought on royalty companies, how much am I on? I love the royalty story and the logic of the royalty company of not having to get your hands dirty with the actual business of producing this stuff. That's real. Okay, it's not your hands. It's the fact that you are insulated from rising costs, for example. And that is a strong plus. I have half a dozen royalty companies in my portfolio. So it's a substantial, it's a preferred area. It's a relatively low risk. And even though I am the independent speculator, I'm not the independent wild gambler. You're not going to find me out there. Even if you got me drunk, you wouldn't find me out there. That's just bad math and I know it. I know it, I'm drunk, I know it. So as a disciplined speculator, the logic of the royalty company is very powerful. And if I find a good one, I'm willing to go there. Now, that said, there's a lot of crap out. Sorry, I keep saying that. Boy, am I Peter Pottymouth today. But let's just say that there are a large number of wannabe royalty companies that have been injudicious in the prices they paid to get some fancy-looking royalty on their books, and therefore due diligence is required. Let me also say that even though the royalty companies are insulated from price increases, cost increases, and so on, they're not entirely protected. If you've got a large silver producer that isn't, but might rhyme with First Majestic, say, and it has a marginal mine that it decides to put on care and maintenance until the margins get better, and that's your royalty, guess what? You just went from cash flow to nothing. You know, you don't have to tighten your belt or pinch a few corners here. You just lost your entire revenue from that mine. And in an environment like we're in right now, where, you know, we've had price increases and now the cost increases are catching up, this is normal. And we can see it in the producers. You know, even the biggest and the best in the business are seeing these margin squeezes. So you get a key royalty in your portfolio goes on care and maintenance, and you're hurting. And even the biggest and the best in the royalty space have taken blows. And you know who I mean. There's like 3 or 4 top dogs in the royalty space, and they have all taken hits to their cash flow from what's happening now. And you don't have to be care and maintenance. They can pare back production, right? And that's happening. But of course, you know, the biggest and the best, they're still cash cows. They're still gushing cash. They can take these and keep rolling, whereas your producer, especially a 1 or 2 asset producer that has to put something on care and maintenance, that's a world of hurt. So yes, I like the royalties, but you can't just, royalty, it's got to be great. You still have to have due diligence. Somebody else had a hand raised over here before. Yes, sir, in the back? Yes, okay, jurisdictional risk and sort of differential inflation. These are actually kind of different things. Yes, clearly inflation being different in different countries. But you know what? If you're producing, this is the beauty of mining and commodities, is that for the moment anyways, the beauty, it's still priced in dollars. So if you're mining and paying your local costs and your energy in bolivars or sucres or pesos, and your prices in dollars are up, you know, you're looking at still, despite our retreats on the COMEX and the LME and so on, we're looking at all-time high prices in many other currencies. So this is actually a plus in my view, not so much a risk. Now it becomes a social instability risk, and I got to say, again, independent speculator, not wild-ass gambler, sorry, I can't say that, not wild gambler speculator, I hate political risk. And yes, some of my esteemed peers have pointed out that if some government steals your money from your mine, it doesn't matter whether the color of the skin of the person stealing your money is brown or white. That's true. Very true statement. Admirable statement. But you know what? You don't tend to get shot up with an AK-47 on your way home from the mine in Red Lake, Ontario. And that matters to me, right? When you have, you know, that kind of fatality or incident, or you have a coup, you know, you're looking at the kind of losses that you generally don't sustain with a normal, you know, producer in other places. So I have a fairly long list of no-go countries, including a lot of South America, a lot of Africa. And, you know, it literally takes like pennies on the dollar or maybe nickels and dimes on the dollar to get me to go anywhere near some of these places. Because everything can go great until you wake up in the morning and read the news and there's, you know, you're down 90% and there's no bid. I'm just not willing to take that risk. All righty, I got 2 minutes. One last quick question. Yes, sir, over there. The drought situation. It's funny. I'm not a religious person, but we've got plague, war, drought around the world. I mean, it's like the 4 horsemen have been cut loose. Not saying that's so. I'm just you know. But you kind of look at the news, you're like, wow. So that I say is a short question. It could be a long answer. I mean, the droughts affect water for many things, including the mines. You've got water rights, and I'm not sure the details of your particular contract. You know, who has permanent rights to drain the Colorado River, and who has contingent rights? I can't tell you that. It's above my pay grade. But I think it's a real issue and a real concern. I don't think it's, I mean, we'll see about the climate change thesis, but I don't think it's a permanent thing. It's something to be concerned about now. I think it's, I mean, actually, for most of our U.S. miners here, most of them don't really drain a river. Most of them buy some local farmers' watering rights. I mean, in Idaho or Nevada, there's almost no water there anyway. And you see these mines in the middle of the desert. They're draining. I gotta go, but like you drive through these places and you see these mountains and the valleys are flat. That's not actually the bedrock. That's all the gravel and rubble, the alluvium that's come off these mountains and filled up the valley bottoms. So if you're driving and you imagine these mountains on either side, they're at this angle, they come in, where does that V meet? Probably a mile below you or more. All that flat stuff above that mile below you, that's full of water. That desert is actually a desert floating on water deeper down. And most of the mines, that's where they get their water. They get permits to drill and pump from there. I'm not sure I'm really helping you with the question, but I do think it is something to consider, but very case specific. You know, where are you getting your water is a legitimate question in your due diligence list. Okay, I think that's it for my time. I haven't been given the hook yet, so if somebody's got one more question, I'll give it a go. Can I mention uranium? Can I do that in a silver symposium? All right, well, okay. So real quick, I actually think that uranium might be the day saver for many of us long-suffering gold and silver bugs. The near-term perspective that the Fed is beating inflation, I think that's a load of dingo's kidneys. I think it's going to stay high even with the recession. Stagflation is my outlook. But right now, nominal rates have turned up. CPI, even if that's BS, it's what the traders look at, has turned down. So real rates are less negative than they were before. That is a real headwind for monetary metals. And at the same time, you have the recession scare weighing on silver's industrial side. So near term, I'm looking to buy. I see this as a buying opportunity, but what does that mean? It means I think prices are going to be under pressure. Uranium doesn't care about any of this. Uranium is what you need to keep the lights on at hospitals. It's base load energy. It's, if you decide not to drive to grandma's this weekend because money is tight, you still want the lights to turn on. That's what uranium does. And we have seen, it's too early to call it, but we have seen very encouraging signs in recent, like this last week, trading of uranium separating from the broader markets. One of the sort of, silver bugs think they've got it bad. Oh, it's manipulated. JP Morgan has it out for me personally, right? The uranium guys, they're going crazy because uranium will be up 5% in a day, but the markets are having a bad day. It has nothing to do with uranium at all, and the uranium stocks are down 15%, like the same day. So long-suffering silver bugs, go talk to the uranium bugs about pain, and you can both cry in your beers. But what I'm saying, though, is that there's some evidence that that's starting to come unglued, which would be great, because the uranium story is separate from the broader markets, and even though it's, quote, energy sector, it's different. It's, like I say, it's not like optional travel to Fiji or even putting off the weekend trip to grandma's. It's base load energy, which, by the way, 20% of the energy in the United States, much higher in Europe, where, do they have issues with energy in Europe? Like if even Germany, where they have so many tsunamis and we're so legitimately worried about their nuclear power plants, if even Germany is rethinking nuclear energy over there, this is all extremely bullish for uranium. And yes, okay, maybe 50 years from now it'll be all thorium or something like that. It's uranium now. And, I won't go on too long about this, but don't look at the fluctuations, or rather look at them as opportunity, because over the last 5 years, this is not a recent thing. The last 5 years, the trend in uranium has been 2 steps forward, 1 step back. It's been this highly sawtooth upward slope for 5 years. And the use case is extremely strong. The demand just keeps going up. China's building scores of these things. Europe's doing an about face. I actually, in the near term, I think uranium is my highest, I tried not to be mealy-mouthed. Uranium is my highest confidence thesis in the near term. Okay, I haven't been given the hook yet, but I'm pretty sure my time is up. Is the next speaker here? No? All right, well, I'll take another question until they give me the hook. Yes, sir. I love these questions. I thought you guys were all silver bugs. You're supposed to be fanatical. Oh, the fanatical ones didn't come listen to Darth Silver. That's what it is. Here's my oil mask. For everybody who didn't see my opening speech, you need to watch the recording. Yeah. I like oil, actually. If you read Lynn Alden at all, and if you don't, I do highly recommend Lynn Alden. I'm not paid to say that. She doesn't have an affiliate program. She is an affiliate for us, but I just think she's brilliant. And her macro view is not only deeply thoughtful, historically rooted, and currently updated, it's got useful takeaways. So I like that a lot. And she makes this argument that I find quite persuasive. It's kind of like tobacco. When tobacco became so hated and you started crimping access to capital and legalizing tobacco, but the smokers weren't going to stop smoking overnight, what happens to the price of tobacco? Whoop. And that's basically what's going on with oil right now. You've demonized it. You've disincented production. Biden's running all over the world trying to get more oil supply. He's got plenty at home, but no, can't do that. Can't. So it's been so demonized. You know what? It's a rational response for the refiners to say, why would I build a refinery in the United States? That's like, why would I go mine gold in Bolivia? You do that and they're going to steal it from the gringos. You've got something that is going to take, at best, 50 years or what, I don't know how long it's going to take. It's going to take decades for our species to stop burning oil for fuel. But the supply is already constrained. And the access to capital, the fix for the supply is constrained. So I do think that triple-digit oil is the new baseline normal. I'm not saying it never goes under. We're under at the moment, but not much. It used to be like 60. I don't think 60 is ever going to be the normal again. I think triple-digit oil is the new normal. And if we weren't looking at rising perception of recession now, I probably would own a couple more oil stocks right now. I do have some on my shopping list that I'm interested in. But since we've got this fear of recession, and that's usually bad for industrial minerals and the energy sector, I'm actually sort of waiting for that shoe to drop. But I like it a lot. I think it's a great contrarian play, because the whole agenda is actually going to force oil prices high. I mean, look at the whole sad story with Russia and so on. The sanctions and the war and the economic war are actually making more money for Russia. That's a metaphor for the entire oil industry and the ESG agenda. And I'm not condoning Russia. I'm not congratulating Russia. I have many, many friends in Ukraine, former students. I have people there now. None of them have been killed yet. One parent. So this is personal. I'm not making light of it. But I'm just saying, this is the reality. The reality is oil's not going away overnight, but the industry has been clobbered and the access to capital is constrained, and that's extremely bullish for the price of oil. But that doesn't mean it has to be tomorrow. So thank you very much. I appreciate it. Lack of eggs is much appreciated.